Welcome to Ilagan Whiteboard Friday, where we look at complex legal and compliance issues in a simple to do way. This series is brought to you by Ilagan, your partner and provider of end-to-end business services.
Hi, welcome to Ilagan Whiteboard Fridays, where we cover various complicated tax and legal issues in a user-friendly manner for benefit of founders. I am Naveen from Ilagan. Today we will look at tax deducted at source, a very important topic. So we have all been paying income tax. So since tax collection is a major challenge for the Indian government, they thought why not we try to minimize the overall collection effort, and that's why they came out with TDS. So TDS is basically whenever an income is generated, a revenue is generated, you tax it at the source from the point where it is generated. Because going to each and every public and asking to give us our taxes could be very, very challenging. So that's why the government said and thought maybe we can look at the businesses where it is much more easier to implement any compliance, and that's why TDS. So TDS is actually a tax, income tax, when you have to deduct a TDS before making a payment. So wherever you are making the payment, that time itself you deduct a TDS. So that is what a TDS is. What is TAN? TAN is like you have a PAN number, it's a kind of a registration. So whenever you are depositing the tax that has been deducted, you need a unique identification number. So that's where TAN is. TAN number is a number through which you say, okay, I have deducted this much payment, this is my TAN, and then you make the payment to the government. Why TDS? We have already looked at it. Since the tax collection is a very important factor, and to minimize the risk, the government says you should deduct the taxes at source. Now, who should pay? Ideally, individuals, if they are not doing any business, are exempted. Like for example, as an individual, when you are paying a house rent, even if you are paying 40,000 a month, you don't have to deduct a TDS because that's not your regular. So typically the businesses, even if it is a proprietorship business, and even if you are a private limited or an LLP, then it is mandatory to deduct proper TDS before making any payment. Even in proprietorship business, if you are not a tax audit case, which typically is under say 15 lakhs of turnover, then also you can skip at times paying TDS. So then, but if you are an auditable case, then you have to mandatorily deduct a TDS. There are two major categories in TDS. One is TDS from salaries, and other is other than salaries. So salaries we have been mostly aware because we have seen any job that we have been into, our employer has been deducting tax on our behalf and then paying to the government. So that's exactly the same thing. It's just that now you have become an entrepreneur and now you are the employer. So for all your employees, you have to deduct taxes on salaries before making a salary payment. If an employee is not getting getting a non-taxable salary, for example, then you may not deduct TDS. Otherwise, you have to deduct TDS and then only make a salary payment. Other than salary, few examples could be fees, interest payment, rent. If you have a contractor or a consultant who comes and charges you. So before making any of these payments, you have to deduct TDS. There are various slabs defined for each, beyond which, suppose if you are making a rent payment of more than 15,000 a month, then only you should deduct a TDS, otherwise not. So if you are making say 8 to 10,000 a rental payment, then you may not deduct a TDS. So there are various slabs defined for each of these category. So you should talk to a tax expert, or maybe you can talk to us at Ilagan to find out what are those slabs and how to deduct TDS. How to calculate? Generally TDS is on the gross amount, so whatever amount you are making finally payment, on the whole amount you should deduct a TDS. I'll give you a small example of a services. So suppose you have a consultant who charges you along with a service tax. Say for example his bill was 10,000 rupees and he has added for calculation purposes a 10% service tax. So 1,000 rupees of service tax. So 10,000 plus 1,000 is total 11,000. So you should deduct flat 10% on the 11,000 and not on the 10,000. That is 1100 as the TDS is what you should deduct at. So TDS is generally deducted on the gross amount and not on the net of service tax and stuff. Payment is due every month. You have to make a payment every month before 7th. Otherwise, you incur interest on the delay for the payment for which the payments has not been made. Returns are filed every quarter before 15th of every quarter. So your quarter is April, May, June, and July, August, September like this. So September returns should be filed by 15th of October or so. If you don't pay, if you don't file returns, then there could be a penalty for delay in filing of returns. Now, recently the government has introduced something called penal rates. So we'll talk about rates. Rates vary again depending on the nature of payment, whether it is fees, rent, contracts, or something else. So, but the returns are rates vary based on the nature of fees. What is penal rate? So recently the government has said that whomever you are making a payment, if they don't have a PAN number, then you have to deduct TDS at a penal rate. In most of the cases, the penal rate is defined at a much higher of 20% flat. So typically, if you look at TDS rates, that varies from 1% to 10%. But if the person to whom you are making a PAN, if you are making a payment, if he or she does not have, or a company does not have a PAN card, then you have to deduct TDS at 20% rate. Refunds. So many of the entrepreneurs keep asking us whatever tax that we deduct, since this is an income tax, when it will get refunded. Now the refunds are being simplified at income tax level. If you are going for an e-filing, the refunds are very quick. Earlier it used to take couple of years. So once you file your annual income tax return, within couple of months, if there has been an excess TDS on your account and if there is some taxes due to be refunded, then your refunds will come back fast. Now we'll look at consequences of not deducting proper TDS. So if you don't deduct a proper TDS before making any of these payments, salaries, fees, rents, contracts, or whatever it is, then those expenses will be disqualified. What does this mean? This means that suppose if you had an income of say or a revenue of say 10 lakhs, and if your expenses on which you had not deducted TDS is about 3 lakhs rupees, and total expenses is say 5 lakhs. So the 3 lakhs will get disallowed. That means your total expense reduces to 2 lakh rupees. So you have to pay an income tax on 8 lakh profit, not on 5 lakh profit. So it is very, very important to deduct a proper TDS before making any kind of payment, otherwise those expenses will get disallowed. And it is also equally important if you are making a payment to NRIs or any foreigner, if you have a cross-border transactions. So there are again specified rates defined, so you should deduct proper TDS, and the government is very, very important, very stressful on these NRI and foreign payments, because it is very challenging for the Indian government to collect income tax from those people. So that's why you should be very cautious when making any of these payments to deduct a proper TDS. That's all on TDS. So we have looked at why it is important, because otherwise your expenses can get disqualified. Proper rate of TDS is also important. If you don't deduct at proper rate, if you don't have a PAN card, then penal rate. Otherwise the specified rate, it is important. And typically all businesses, whether you are proprietorship or private limited LLP, should deduct a TDS. That's it. I hope if you have any more queries, you can talk to us at support@ilagan.com, or you can also check out our knowledge base, which contains a lot of these questions. Thank you for that.